Atul has just completed all the formalities of buying life insurance, and insurance broker is busy adding a rider to his policy. The broker said that by paying a little more in the existing insurance policy, Atul will be able to take a bigger cover.
So what is this rider? Rider is a way to add additional services to the life insurance, also known as add-on. You can increase the coverage of your existing insurance without buying a separate insurance policy. Accidents, critical illness or disability can be covered in the rider. But keep in mind that adding a rider will increase the premium.
So, what should Atul do? Atul will have to decide on the basis of his need and financial capacity. Some riders may be useful and some may not even be needed. A separate cover can also be taken for the cover provided by the rider.
On taking cover for situations like critical illness, the premium will be revised every year and the value of the premium will also increase with age. But if the rider is taken with term insurance, then one will get critical illness cover for the entire tenure at a fixed premium. So, have the insurance companies become so generous that they will give you riders at low premiums with term cover? Just be careful while buying a rider.
Now, Atul will pay an annual premium of about rupees 15,754 for a life insurance of rupees 1 crore. Adding around rupees 7,777 critical illness rider to this, his total annual premium will become rupees 23,531. On the other hand, up to rupees 25,000 will have to be spent for standalone critical illness cover.
Riders are economical against the cost of a new policy, but a cheap rider can cost you in many ways. Critical illness rider is taken for life insurance to protect against serious diseases. Cancer, heart attack, organ-related diseases, stroke, etc. are included in this. While choosing this add-on, always check the list of critical illness that are covered by the insurance company.
Because different companies may have different cover for the critical illness. So, understand which covers what. But it is even more important to see which stage the critical illness will be covered. Most of these policies cover major illness at the advanced stage, that is, at critical stages only. On the other hand, if you take a standalone cover, it will cover every stage. As soon as the life insurance matures, the rider benefit will also stop at the completion of the tenure. In such a situation, if you want to cover to fight against any serious disease, then remember that more of it will be needed in the old age. And if it stops as soon as life insurance ends, what is the use of it? It is not that you ignore all the riders. Accidental death benefit rider is a good option at a daily premium price of just rupees 100. You can double your sum assured with an annual premium of only rupees 1000 to 1200. For example, if Atul has a life insurance cover of rupees 1 crore and has taken a separate accident cover of rupees 1 crore, his family will get a claim of rupees 2 crore if he dies due to an accident. Keep in mind, the rider cost is usually around 5 to 10% of the total premium of your basic cover. You can add any number of riders to your insurance, but the premium on all the riders should not exceed 30% of your basic premium. However, keep in mind that when you take multiple riders, your premium amount increases and it can be very heavy on your pocket. Now, Money9 suggests most riders are cheap. You buy more insurance cover by paying some extra amount without buying a new policy. There are many types of riders available in the market. Before buying a rider, understand your needs and choose a rider accordingly. If it is up to the insurance agent and broker, they would sell 10 riders. But do you need that much? For example, if you do a job where you have to travel by road or air, then you can take an accidental insurance rider for extra protection. But as far as critical illness rider is concerned, it makes more sense to take a separate cover.